Good morning and welcome to today's pre-market video. Now in today's pre-market video we're going to take a look at the Fin Nifty. I will take a look at what option buyers should do with it and what option sellers should do with it. Now in all pre-market videos we cover the news first, but today there's not much to cover on the news. In fact, there's really nothing to cover on the news as of now, as all the news is focusing on more opinion-based items of yes, the American market is open on a flattish note, and why the American market is open on a flattish note, and those type of articles. There's nothing really factual and concrete in the news. So due to that, I expect tomorrow in fact to be more a technical driven day rather than news driven because of the lack of overnight news. Now coming to the Fin Nifty, before I drop on the levels and give an explanation on all of that, now if we take a look at the Fin Nifty in terms of what's been going on and why we have been in this range. Now we have been in this range primarily due to two candles. The first one is this one which had formed here, and then this one which had formed here. These two high volume bearish candles is what caused the issue. Why I say that is, if we look, the top of the high volume bearish candle was here. We tried to go back immediately above that and then failed, and I had a big gap down. And if we look, we ended up gapping down below the low of the bearish candles and stayed below it, and we have been having that issue from quite some time. In fact, we have spent the whole of August in this whole dilemma of this issue. So now that is why the uptick right now is proving to be harder, because number one, even though these candles were here, but due to them being high volume bearish bars, and they are following all the technical rules which have to be followed for high volume bearish bars, the upside of it is very significant. And if we look at it, the up is there and we have not been able to take it out, whether we look at it here or now we're going to do a second attempt. However, now I see there's a bigger chance of us breaking above it, and I will explain why. Now the first reason is simply what again happened over the weekend. The Fed created a lot of positivity about rate cuts and everything, and that has managed to drive up the indexes in a positive way, and it will have a knock-on effect on stocks across the market, as let's say shares which, for example, I'm holding like Hindalco and all, did well yesterday, and I expect them to do well for the coming few weeks until the Fed has its meeting and we get to know whether it will be a concrete 25 basis points or 50 basis points. So that is going to drive equity markets in the right direction, and it should continue. So due to that, I believe now there's a higher likelihood of us getting out of this range. And another factor, forget the news, if we look at the simple technicals, we see, let's say on the hourly chart, we have managed to regain above the 200-day moving average, which has been a struggle, as after we had these high volume bearish candles, we have not really been able to get a clean close of a good bar above the 200-day MA, and we have finally managed to get one full high volume bullish bar in this. So due to that, now in tomorrow's trading session, I believe if we break the high of today, that's when we will, I'm saying today because I record this the night before, so if we break the high, which is roughly 23,467, then the index will start making its way up to the first important resistance zone, which is between 23,538 and 23,580. Now 23,538 is the high volume bearish top, and 23,580 is the quant resistance level. So I believe right now for Fin Nifty, this is basically a very important resistance range. This is, if we break this, we will rise to here, and if we manage to break this and close above it in either tomorrow's trading session, basically 2 days, in 1 to 2 days we manage to close above this, then the Fin Nifty will have a clean track to go towards 24K in the coming sessions. So that is how I see it in terms of a trader, and also this will heavily benefit option buyers who have had, I would say, a rough August, as August has given very small pockets of opportunity, but has mostly been range bound markets. So due to that, option sellers have had an easier time in August and option buyers have had a tougher time. So that is what I see for the indexes. And now for today's expiry trading plan. Now I believe again we will have to sell both calls and puts, and the pure reason of that being that we have a limited upside right now due to this key resistance zone, and we have a limited downside because of this key support zone. This is that support we see. This is a quant support between 23,240 and 23,280. Also a low of a high volume bullish bar. Also right below it is the 200 MA. So there's a lot of support there. So if you're an aggressive option seller, I believe you can sell calls below 23,280. So you can take a bit more risk. I will be taking a bit more risk, and I will sell technically 23,300 and below. So tomorrow, again, as I'm recording this the night before, in today's FinNifty Expiry, I'll be selling puts of 23,300 and below. And then on the call selling front, I will not enter call sales in the earlier part of the day. I'll enter in the latter part of the day, and I will look to sell calls first above 23,600. If I'm aggressive, if I take a relaxed approach, then 23,720. But call sales is where I'm going to decide whether I'm going to be cautious or aggressive in the day rather than at night when I'm recording this video. This is as I do not want to take a very aggressive stance at the wrong time and end up getting beaten up. So again, on the option selling front, I will be selling puts of 23,300 and below due to the key support at 23,240 to 23,280, and I will be selling calls if I'm aggressive above 23,580, so 23,600 basically, and if I'm not playing aggressive, then 23,720 and above. Most likely I will play aggressive, but call sales have to be done in the latter part of the day, while put sales have to be done in the earlier part of the day. Do keep stops, as you do not want to be caught out by sudden movements. That's it for today's video. Thank you for watching, and if you liked it, hit the like button and subscribe to the channel and hit the notification bell. And any suggestions, you can drop them in the comment box below or WhatsApp them to the number shared in the description. Thank you.